Assalamu alaikum and hello everyone. In today's class, we are going to talk about capital and revenue expenditures. You know that depreciation is one of the very important and major topics of O level and IGCSE accounting. And before starting that topic, it is very much important to have got a clear-cut understanding of uh, the concept of capital and revenue expenditures. In our business life, we deal with several number of the expenditures like salaries, rent, utility bills, um, heating and lighting. Likewise, sometimes we buy some non-current assets like furniture and fixture, plant and machinery, land and building, vehicles, etc., etc. These all are expenditures. But out of these expenditures, some of them are called revenue expenditures, while the other are called capital expenditures. So today, first of all, we are going to see the capital expenditures. Remember, whenever we buy a non-current asset, that is our capital expenditure. Okay, the purchase price of the non current asset. Okay, this is our capital expenditure. Secondly, all those expenditures which are incurred to bring this non-current asset to the business location, they will also be included in the cost of the machinery, and they will be also be called capital expenditures. For example, you are importing a plant from China, let's suppose. So you are supposed to pay import duty, you are supposed to pay insurance in transit, you are supposed to pay freight charges or carriage inwards. So these all expenditures will be classified as capital expenditures. Okay, likewise, all those costs, all those expenditures which are necessary to bring the non-current asset into workable condition, into usable condition, they will also be called capital expenditures. Okay, they will also be called capital expenditures. For example, installation charges, installation cost, assembly cost, or testing cost. For example, you pay some professional fee for setting up the business, like you are paying to the engineers or the technicians for the installation of that machinery, or you are preparing the site or foundation, you are making a foundation to install that machinery. These all costs will also be classified and categorized as capital expenditures. So we may say the purchase price of the non-current asset, all the cost to bring that asset to the business location, plus the third item is all the cost necessary to make it or to bring it into workable condition or usable condition. These three items are called capital expenditures. After that, there are some other sort of expenditures too, which are called capital expenditures. And the next item is all those expenditures which enhances the earning capacity of the business, which increases the efficiency of or the productivity of an asset, or the useful life of a non-current asset. These all expenditures are also classified as capital expenditures. Okay, I'm repeating it again. All those expenditures which increases the capacity, productivity, value, efficiency, or useful life of the asset, of the non-current asset, they are also called capital expenditures. For example, now let's suppose you are upgrading your machinery or equipment to improve output or efficiency. This is your capital expenditure. How? Let's suppose you have a plant. The output is, let's suppose, 1000 units in 1 hour, and now you have added a certain let's suppose a particular part in that machinery, in that plant, a particular part, and that part will increase the output, let's suppose, from 1000 units to 1200 units in 1 hour. So this is increasing your efficiency and productivity. That's why the cost of this part will be called capital expenditure. um, just like that, if you are adding a new floor or extension to a warehouse or your workplace, again this is your capital expenditure. Why? Because when you add a new floor or extension, this will increase the your earning capacity. Now you may have several number of the shelves over there, you may display new items over there, so it will increase your earning capacity. That's why this will be classified as your capital expenditure. Okay. Now the next item is whenever you construct or improve a non-current asset, this is also called capital expenditures. For example, sometimes you buy a non-current asset. We have seen here that this is your capital expenditure, but sometimes you develop your non-current asset yourself. This is also your capital expenditure. Let's suppose you are constructing your building for business purpose, you are going to use it into your business, then again this construction cost will be your non-current will be your capital expenditure. Okay. And after that, one point we need to remember, we should always remember with this very important point, that capital expenditures provide benefit to the business over more than one accounting period. Normally, this capital expenditure provides us the benefit for more than one accounting period. And what is the accounting treatment of it? We will see it later on. But one thing is that it is shown in the statement of financial position or in the balance sheet. Okay, both are the same name. So we call statement of financial position in all of accounting. So we always show it into the balance sheet. All the capital expenditures are shown in the balance sheet or in the statement of financial position. If an expenditure increases earning capacity or extends useful life, it is capital expenditure, even if it relates to an existing asset. Because sometimes we think that this is we are renovating our current premises, so this should not be the capital expenditure. When you buy a non-current asset, that is our capital expenditure. No, it is not so. Whether you are renovating your current premises or you are buying a new premises for your business purpose, whether you are doing something with your existing non-current asset and you are adding some part, let's suppose, and it is adding the value, it is increasing the productivity and efficiency or value or the life of your non-current asset, remember this is your capital expenditure. There is nothing to do with this concept that this is a new one or this is an existing non-current asset. Okay, so we just have to see what is happening due to this expenditure. If it is increasing the output, value, productivity, efficiency, or the life of the non-current asset, or it is increasing the earning capacity of the business, then we will take it as a capital expenditure. Okay. Now we talk about another type of the expenditure, that is called revenue expenditure. Revenue expenditure is a normal day-to-day expense. Let's see the definition of it. All the expenditures incurred for the day-to-day running of the business, like salaries, rent, electricity bill, heating and lighting, repair and maintenance, these all are your revenue expenditures. Okay. Secondly, these expenditures do not increase the value, life, or productivity or efficiency of the non-current asset. Rather, it helps maintain the asset in its current working condition. Okay, without enhancing capacity or efficiency. And you may see, let's suppose repair and maintenance. Repair and maintenance simply maintains the life and the working condition. it does not increase the value or capacity, earning capacity or efficiency of the business, of the premises or the plant, whatever is that. And the third is that it normally provides short-term benefit, but may occasionally extend beyond one accounting period. For example, the tires of a vehicle. The tires may have a life greater than 1 year, but and so in other words, we can say that they are benefiting to us, to the business, in more than one accounting period, but we will take it as a revenue expenditure. Why? What is the reason? The reason is that actually it is not enhancing the capacity or efficiency of the non-current asset. Rather, it is simply maintaining the working condition of the vehicle. Likewise, the another is point is that is about the accounting treatment. These expenditures are charged directly into the income statement, like salaries, rent, repair and maintenance. You know that these are taken into the income statement as an expense. Okay. While the capital expenditures are taken as a non-current asset, and capex are taken into the balance sheet rather than being charged in the income statement as an expense. So these all are the examples of the revenue expenditures. Okay, you may see routine repairs and maintenance, repainting building for upkeep, salaries, wages and rent, fuel, stationery and consumable items, replacement of tires, belts and small parts that restore the asset to its original condition, insurance premium for vehicles. These all are the examples of revenue expenditures. Now, one exam tip for you people: even if the expenditure lasts multiple years, it is revenue if it does not improve the asset's earning capacity. Remember these things, but sometimes this point misleads us. Students sometimes make mistakes. They say, okay, since this expenditure is resulting in an increase in the life, or you may say that it is benefiting for more than 1 year, that's why it should be classified as a capital expenditure. No, the crux is that an expenditure may give you the benefit for more than a year, but it is not, if it is not increasing the earning capacity of the business, it is not increasing the value or the efficiency of the non-current asset, no, it is not going to be classified as a capital expenditure, though it is benefiting us for more than a year, more than an accounting year. Even then that will be classified as a revenue expenditure. As I have given you the example of tires, that the tires of a vehicle is classified, is classified as a revenue expenditure. You have been using your car for several years and now you are replacing the tires. That will be classified as a revenue expenditure. Okay, so now we just have a quick comparison. We see the quick comparison of capital and revenue expenditures. The purpose of the capital expenditure: we want to improve the asset, we want to enhance the earning capacity, or we want to acquire a non-current asset. When you use the word of acquire, we mean to say purchase plus all expenses to bring that asset to the business location, plus all those expenditures necessary to bring that non-current asset in workable condition. So these all three things altogether make acquire. Okay. Secondly, the purpose of the revenue expenditure, now it simply maintains the asset. It is a day-to-day expense. Okay. Benefit: yes, normally the capital expenditure benefit in the long term, normally more than one accounting period, and the revenue expenditures give a short-term benefit. However, it may extend beyond one period, but with no improvement. But it will not give an improvement in the asset, in the non-current asset. Okay. What is the accounting treatment? If you compare the capital expenditure and revenue expenditure, the capital expenditure is shown in the balance sheet ठीक है, in the non-current asset section or the part of the statement of financial position, or in other words you can say that we capitalize it. And revenue expenditure is taken as an expense in the income statement. And examples I have already given you: when you buy a new machine, when you extend your warehouse, all the installation costs, IT system upgradation, these all are your capital expenditure. And the revenue expenditures examples, you have already seen them. Again, tires, fuel, minor repairs, routine painting, etc., salaries, these all are your revenue expenditures. Now as now we see an example. Okay, now there are some of the expenditures here, and we just practice it, and we see that which expenditure is a revenue one and which one is a capital expenditure. Okay, let's attempt this question. Cost of adding a new room to the office building. What do you think? Is it a capital expenditure or revenue expenditure? Yes, it is a capital expenditure, since you are adding a new room to the office building. It is going to increase it might increase the earning capacity. You may say it is increasing the value of your premises because you're adding a new room in your office. Okay, and second one is monthly servicing of machinery. Monthly servicing of machinery, what do you think? Will it increase the value if you are servicing your machinery? Whatever was the value when you bought it, will it increase if you increase the service, if you incur this cost? Let's suppose you bought a car at a price of, let's suppose 10 million rupees, or in terms of dollars, let's suppose $20,000 for example, and now you take it to the for cleaning, let's suppose. So what do you think? After cleaning, will it have a greater value? Certainly not. So servicing and all these sort of things never increases the value of non-current assets. It simply maintains the value of the non-current asset. That's why it is a revenue expenditure. Carriage inwards, yes, on newly purchased equipment. So we have seen that all the expenditures to bring the non-current asset to the business location is classified as a capital expenditure. So this is your capital expenditure, this is your revenue expenditure, and this is your capital expenditure. Repainting shop walls due to wear and tear, again this is your revenue expenditure. Wear and tear, it is a routine phenomena, you have to pay for it. Installation cost of a new printing machine. Installation, I'm sure that you remember this word installation, making a foundation for the new machinery. This is your capital expenditure. Replacing a broken window of the office. If you are repairing something, that is your routine expenditure, so it is your revenue expenditure. Legal fees paid to purchase land. Yes, this is your capital expenditure. Not only the amount which you are going to pay for the land, for buying the land, for the purchase of the land, but also all the legal expenses will be capital expenditure and will be the part of the cost of the land. Let's suppose you bought a piece of land at a price of $1 lakh, let's suppose, and you paid, let's suppose 5% duty, stamp duties and some other legal charges. So $5,000 will be included in the total cost of the land. That will be 105,000. Now we would say that the total cost of the land is $105,000. So the total capital expenditure is $105,000. So This is your capital expenditures. What about fuel expenses of delivery van? Yes, this is your revenue expenditures, day-to-day expenses. Upgrade of computer RAM to improve performance. You are upgrading your computer to improve the computers. Let's suppose there are several number of the computers and you are upgrading it. So, and it is improving the performance. Um, this point is very much important, that it is improving the performance. If it is improving the performance, then it should capitalize. Otherwise, if it is normal, it is a normal expenditure, then certainly routine expenditure, then simply we will classify it as a revenue expenditure. So if you are upgrading your computers and from in all the computers you are installing the new RAMs, let's suppose, so it should be classified as a capital expenditure. But the point, remember this point, that it should improve the performance, not maintain the performance. If it is maintaining the performance, let's suppose due to any of the reason the performance has fallen down and someone says to you that the RAM should be new RAMs or the upgraded RAMs should be, more RAM should be added in it, then it will work as it was working before, then it is not a capital expenditure. Wages paid to factory workers are your revenue expenditures. Repairing machinery damage during use, you're again repairing revenue expenditures. Buying new office furniture, you are buying that is your capital expenditure. Buying of a non-current asset is a capital expenditure. Annual insurance premium for motor vehicles, annually you pay the insurance, this is your routine expenditure, so this is your capital expenditure, revenue expenditure. Extending warehouse storage capacity, this is your capital expenditure. And finally, the last one is transport cost of new furniture to the office, this is your capital expenditure. Okay, I'm sure that you have got that what is the difference between the revenue and capital expenditures after attempting this exercise. Thank you very much. Let's meet in the next class.